Well, I came across a RentCap report yesterday advising investors to look away from the capital markets and put their money in key economic sectors instead, such as agriculture, the consumer services sector and the services industry as well, which have not got sufficient listing on the NSE itself. Looking at the growth we're seeing and projecting for the country, do you share that sentiment?
I believe I totally support and share the sentiments of the Prime Minister in terms of urging the players in the capital market to actually diversify their investment portfolios into other sectors of the economy, especially with energy and agriculture, because we believe that these are sectors that are actually awash with opportunities that can actually be able to enable the pillars of economy to actually grow, stabilize the macroeconomic indicators, and actually be able to drive us towards the 2030 Millennium Goals. So yes, I fully support his views. Implications
then for the market itself, for the NSE 20 as we progress specifically?
Come again?
Just implications then, with that being the kind of mindset and theory that's out there, what are some of the possible implications then for the NSE itself moving forward?
Basically, what I think is the government, in conjunction with the players in the Nairobi Stock Exchange, actually looking at the strategy in terms of diversifying, because when you're looking at the current investor confidence of the market, local investor confidence actually a bit low, and most of the players have been foreign players who've actually been looking at key stocks you've mentioned, Safaricom and KCB. But now the way forward is actually to look at ways into having long-term investment options, whereby we're able to look at liquidity in terms of capital moving from the government, private sector and private equity firms into the capital market, into sectors like infrastructure and agricultural.
Well, talking about key economic sectors in the manufacturing space, we've seen numbers out of Samir yesterday. Market reaction to those, considering that we've seen manufacturing growth well below the national average for 2009.
The results actually that are coming up, the most interesting thing is that despite the problems the country has actually been facing for the last 2 years, not to mention increasing cost of production, increasing inflation, political instability in the country, we've seen that many manufacturing companies have actually been able to sustain their businesses despite the fact that most of the bottom lines have actually decreased. But on the way forward, I think a lot of restrategizing is needed in terms of increasing the increasing the market share in terms of new products and services and new marketing strategies.
For this company in particular, Steve, the key issue has always been cheaper imports. Samir incorporated these business imports or these tire imports into their businesses at one stage of the game, incorporated it into their own business sales. Now the challenge is the fact that the yen strengthened, making those imports more expensive to start off with. It seems like they're always in a catch-22, no matter what strategy they adopt here.
That's very true. However, the government has actually been very supportive of this particular group in terms of the aspect of cheap imports, because right now we have a very active legislation that actually imposes high import duty on cheap imports from China. And looking at the strategy for Samir Group in terms of like strengthening their products and services, but also being part of like trying to import products that can actually show up their profits and capital base, we realize that I think they were a bit hasty in terms of trying to bring on board imports from China, because they should have stuck with the support of the government in terms of legislation, and we see that it's actually been working. We've seen that the Kenya Bureau of Standards actually strengthened its inspection in terms of ensuring that imports are actually streamlined in terms of taxes and quality. So I think what they need to do is stick with the government side, being able to look at the legislation aspect, because that's the only way this company is actually going to be supported. Because when you're looking in other terms of cost of production is a bit high, inflation is a bit high, cost of raw materials is high. So what they need to do is actually try to find ways to actually stick with the legislation aspect.
At the same time, they're continuing to pursue this diversification strategy. A lot of emphasis placed on the construction of the Samir Business Park. What are you making of the strides that are being taken in that regard?
I believe that the diversification of its products and services is one way for the group to actually increase, restrategize its brand in terms of the baseline. Basically, the last couple of years they've been making serious losses. They've been getting very bad press. So I think what they want to do is basically they're looking at what in terms of business, like the business plan complex actually building that's supposed to be completed, I think, in the next 1 year. It's one of the ways for them to actually reduce costs in terms of how they do their businesses, bringing all the operations under one roof and trying to see how they can be able to support other business in terms of strategic partnerships.